Hello, family, and welcome to the Wealthy Wallet. Please don't forget to hit that like, follow, or subscribe button right below. It's the way of telling the site or the app that you are using that this content is very valuable to you. It's also a way to spread the word so that people can learn how to come out of poverty and start using their capital to make more capital for them and create generational wealth. So, without further ado, let's go ahead and dig right into it. What is the stock market? I mean, many of us have a general idea of what the stock market is, but do we really actually know the stock market and the fundamentals of the stock market? Do we know how it operates and how we get involved? Well, if you don't know, that's what I'm here to teach you. I'm here to teach you exactly what the stock market is, how it operates. I'm here to teach you the fundamentals and how to get involved and how to invest in the stock market. So without further ado, let's go ahead and jump into it. The stock market refers to public markets that exist for issuing, buying, and selling stocks. So in order for you to completely understand what a stock market is or a market of stocks, then you have to first understand what a stock is. So what is a stock? A stock is fractional ownership in a company. That fractional ownership can be termed as stock, shares, and equity. So, first of all, a stock is fractional ownership in a company. So, when you decide to buy stock or share or equity into a company, you become a part owner of that company. It's like if I had a bar of gold and I gave each person a piece of gold, you all became a fractional owner of that gold. So when you decide that you want to buy a stock or share or equity into a company, you now become a fractional owner of that company. So a stock, in essence, is fractional ownership. So if you decide to invest into a company, you are investing or purchasing ownership into that company. You're purchasing the right to own a portion of the company. So when you invest, or the fundamentals of the stock market is to buy as a market where you can buy ownership. And its ownership consists of exchanges. And these exchanges are made up of companies. But before we further go into that, you must understand in order to buy fractional ownership, you have to go to an exchange to buy fractional ownership. So that brings us to a stock market exchange. So if you're looking to buy fractional ownership, you have to buy it from a stock market exchange. Why? Because most stocks are traded on exchanges as such as the New York Stock Exchange or the NASDAQ or Dow Jones or the S&P 500. Many of y'all probably heard these coin terms, but this is where you will have to buy fractional ownership into a company. Stock exchanges usually provide the marketplace to facilitate the buying and selling of stocks among investors. So in order to get the concept of a stock market, you need to think of a stock market like a mall. And you know, in a mall have a variety of stores. And all those stores are businesses, but all those businesses are housed under one building. And that's what an exchange is. An exchange is look at it as a building that houses all companies or businesses within that building. So when you want to invest into a company, you have to go to the mall if you get the concept. So if you want to buy ownership into a company, you have to go to the mall. You have to, in essence, the stock exchange. You have to go to the stock exchange in order to buy ownership into a company. And to purchase ownership into a company, you have to go to the mall via aka stock exchange in order to buy ownership into a company. New York Stock Exchange is a mall. NASDAQ is a mall. Dow Jones is a mall. S&P 500 is a mall. All these are malls where companies are housed in order for you to purchase ownership. So in order to purchase ownership into a company, you have to go to the mall, aka stock exchange. And this is where, as an investor, you can buy ownership into a company. And then that ownership into a company consists in indexes. What are stock indexes? Stock indexes are a grouping of companies, stocks that measure change in the broader stock market or a sector of the stock market. A stock index is a gauge to read the whole market or sector of the market. So in essence, the stock indexes are groupings or categories. Say, for instance, you have a category of nothing but shoes. You have Designer Shoe Warehouse or Foot Locker or Champs or Finish Line, or you have all these companies, or Shoe Palace, or wherever you buy your shoes from. And all these shoe companies are putting, all these shoe businesses are put into one place or to one group or to one category so that this category could be measured. This is why they have indexes to be able to measure how the the businesses are doing as a whole. Because if I have Foot Locker at down 20% and I have Finish Line and all the other shoe companies up 20%, then we need to take a look at Foot Locker as a whole. Why is this company doing? What is this company doing wrong? What is this company doing right? So stock indexes helps us to better engage how a company is doing because we're able to compare it to the group that is in. So you have many different indexes. You have the oil index, the oil and energy index. You have the text index. You have a pearl index. You have so many different index. You have the clothing brand index. There's so many different indexes. There's so many different groups and categories of stock. But you must understand all these groups because those indexes help you to look at the bigger picture. You always have to see the bigger picture before you invest a dime into the company. You need to see how the sector or the index is doing as a whole. How's the index? How's this group doing as a whole? How's the shoe group doing as a whole? How's the tech group doing as a whole? How's the automobile index doing as a whole? How's all these things doing as a whole? Because if the whole index is tumbling, then you understand that I probably should not invest into this stock because the whole index is falling. The whole group is going down. The whole category is on a decline. It helps you to engage. So if you want to, so you got to think to yourself, if I want to buy ownership into this company, how does businesses, other businesses compare in a similar area, a category, or grouping to the one that I'm about to buy ownership into? The one I'm about to buy fractional ownership into, how does this compare to all the other companies that are within this sector? And how's this, index, and how's this index doing as a whole? That's why you need to understand that there are stock indexes and you always need to take a bird's eye view look at the whole entire index versus just the company itself, because it helps you to understand where that company is going or where that sector or that index is going or that group is going or that category is going. It helps you to understand those things. Where is it going? So you definitely need to understand that. What is the purpose of a stock market? The purpose of the stock market is to provide capitals to companies so that they can use funds to expand their business. Most companies are looking to expand themselves. Most companies are looking to grow. They want to buy more product. They want to do more research and development to develop their product so that they can sell to more customers. They want to give a better customer experience. And the only way to do that is by soliciting more funds. They need more money because you cannot create new things. You cannot do research and development without capital. You need capital. You need money. You need capital's oxygen. You need oxygen to continue to survive in business and in life. So if you don't have the oxygen to survive, you're going to die. In business, capital is oxygen. Capital is oxygen in business. So the more oxygen that a business has, the more they can grow, the more they can expand, the more they can run, the more they can flow. So the purpose of the stock market is to help companies get more oxygen, more capital. Companies need capital in order to grow. So they give you the chance as an investor to purchase stock or purchase ownership, fractional ownership in the company so that you can grow. And that's when you give them this capital that gives you the right to earn money from the growth of the company, because you invested your capital into that company. You gave the company oxygen, and it's only right that they give you capital back if they're making profit. So the purpose of the stock market is to help companies get more profit. When investing into the stock market, you have to understand what bull and bear markets are. Two of the basic concepts of stock market trading are bull and bear markets. The term bull market is used to refer to a stock market in which the price of stocks is generally rising. So, and when you hear people when you hear people say that this is a bull market, or when you hear this stock is bullish, or when you hear certain stock, or when you hear the coin term bull, then you understand that the stock is on an incline, it's on an uptrend. That a bull market means the stock or the grouping or the sector or the stock or the company or the business is going up itself. But when you hear when you hear there's a bear market exists when the stock prices are overall declining in price. So when you hear that it's a bear market, then you understand that the market is declining. That market or that stock, that business, that company, or that sector or grouping is falling. That company is going down, is declining. There's money going out of it. And the bear market, in the bull market, money is coming in. New money is constantly coming in. That's what's causing the company continue to drive up in price. But when the money is leaving, you call that a bear market because that means the company is declining in price. It's falling in price. So the difference between a bull and a bear market, one is going up and one is going down. The bull market means it's going up. The stock, the company, whatever you into, the asset, that means the asset is going up. You're gaining more equity. Your investment is rising in capital. But when it's a bear market, your investment is declining in capital. It's falling in capital. That's the difference between a bear and bull market. So what does it mean to be an investor? An investor is any person so what does it mean to be an investor? An investor is any person or other entity such as a firm or mutual fund who commits capital with the expectation of receiving financial returns. Investors rely on different financial instruments to earn a rate of return and accomplish important financial objectives like building retirement savings, funding a college education, or merely accumulating additional wealth over time. So from now on, from this point on, I want you to call yourself an investor because you're going to start using your capital to get financial returns. You're going to start using your capital as an instrument to build you wealth. And as a matter of fact, instead of using the word money, I want you to start using the word capital. I want you to start sounding like an investor, talking like an investor. By listening to all these classes and by going through this course, you're going to start thinking like an investor. You're going to start using the terminology. You're going to start speaking the language of an investor. Because at the end of the day, if I can get your mind in tune with these things, if I can get you to start comprehending on an investing level, then you cannot do nothing but grow. So therefore, you need to start thinking. Matter of fact, start calling yourself an investor right now. Say to yourself, I want you to repeat after me. I'm an investor. I am an investor. I'm an investor. That's what I am. I use my capital, my money as a financial instrument to build wealth, to make more money. I use it to continue to build generational wealth because I'm an investor. I'm looking for a rate of return. So when you decide to invest, when you decide to use your capital to buy fractional ownership into a company, you have now become an investor. So if you use your money, your capital, your oxygen to buy fractional ownership into anything, you can now call yourself an investor. I don't care if it's 1 share, 10 shares, fractional shares, you're an owner. And as an owner of a company, you need to understand how companies operate. But we're going to learn that in another topic. We're going to learn that more. But call yourself an investor because you're an investor. There are 2 ways to buy fractional ownership or to invest in companies. The first way is through pre-public investing. Pre-public investing is when you invest in a private company before its initial public offering called IPO. IPO, again, is initial public offering, is when a company shares trade on a public market, as we talked about, like the NASDAQ, like the S&P 500, like the Dow Jones, the New York Stock Exchange. When those companies decide they want to go be in the mall, They want to take place and purchase a spot to be in the mall so that people can buy fractional ownership. This is when a company goes public. This is what that means. They allow people from the public to come and shop, to come and purchase, to come and buy fractional ownership from them. See, pre-IPO though, pre-initial public offering companies shares are not available to everyone. It's just like it's just like when you buy wholesale merchandise. Wholesale merchandise is not available to everyone. You have to have a wholesale license in order to buy wholesale products. So you don't have the opportunity. So basically, when a company does an IPO, initial public offering, you don't have, it gives you the opportunity as a public, as the public to buy into their company without having a wholesale license. See, but if you want to buy into a private company, or if you want to buy wholesale products, you got to have a wholesale license, right? So this is what brought into pre-public investing. But in the past, pre-IPO investing was limited to accredited investors, private equity firms, hedge funds, and a few other groups. But now it's starting to open up for individuals who are looking to invest capital into companies before, or to startup companies or companies who have not yet went public. The first and the biggest reason for pre-IPO investing is the gains. Pre-IPO investing can lead to tremendous returns for investor. Again, you're an investor. So let me give you an example. Since the start of the stock market, it has historically returned an average of 10% annually on those who invest in a public company, a private company, and that's without considering inflation. But we're going to talk about what inflation is too, because I need you to learn everything. You got to know everything. But let's use Snapchat, which is on the Nasdaq. New York Stock Exchange. You can go into the New York Stock Exchange Mall and buy Snapchat. And that before the company went public in 2017, let's say you invested 100 in the early days before it went public. Your $100 would have turned into $22,000. That's a 21,000% gain. 21,000% gain if you could invest it into Snapchat before it went public. And I think I remember one time Gary Vee saying, he's a public speaker and an entrepreneur. And this gentleman said he had the chance to invest $25,000 into Uber, but he didn't completely believe in the ideal of people sharing their cars and picking up other people. So he declined to invest. But he said if he regretted too. He said if I would have took that same 25,000 and invested into Uber before it went public, as it was a private company, that $25,000 would be worth $400 million today. That's why it's very important to start taking a look at private companies, startups before they go public. Start taking a look at companies while they're on the ground floor. It's very important as an investor. You're an investor. So why are you not looking to take advantage of companies that are at the ground floor that could possibly change the world? Why would you not do that? But I have a way to help you to start investing into private companies. They without having a wholesale license, or being a hedge fund or a private equity firm, or some type of large firm that gets this opportunity before people like me and you get the opportunity. But now, technology is leveling the playing field. So now we have a way to invest in companies before they go public, to invest in startups. And here are a few platforms that you can use to invest into startups. You can use Stash, you can use Start Engine, Seed Invest, and Angel Investors. I've invested on all platforms. The best one to me is Seed Invest and Start Engine. I love both of them. Angel Invest is a really good one. Stash is fairly new. Start Engine is fairly new, but it's backed by many big investors. Seed Invest also. Angel Invest is probably the very first one before any of them. Angel Invest is really good. But Stash, all these platforms and sites gives you the opportunity to invest in the companies before they go public. So I suggest that you download all of these apps. So all of these apps, or visit these websites and mark them as your favorite, so you can begin scoping out companies and starting to invest in these companies because you are an investor. You're an investor. And start calling yourself an investor because you are an investor. Start calling yourself that. So you got and if you're going to start calling yourself that, you have to start looking to where to invest your capital, to where to use your financial resources to invest into things before they go public. Because again, just like Snapchat, a person who invested $100 into it would have returned them $22,000 on $100 investment. So let's start using that. Let's start using these platforms to get in on companies at the ground floor who you think possibly going to change the world. But we're going to talk about research and development and how to choose these companies farther down the class. But then we have another way of investing, post-public investing. So post IPOs, IPO again stands for initial public offering. When a company is now publicly can be traded. I mean, you can publicly invest into it without having any type of wholesale license or being a hedge fund manager or a large private equity firm. You don't have to be this because you can find these companies right on brokerage. What is a brokerage? Well, a brokerage are companies like Robinhood, Fidelity, TD Ameritrade, Webull, E-Trade. There's so many of them out here. I mean, your bank probably is a brokerage. Chase has a brokerage firm where you can start investing money into public companies. Webull is good because they also let you invest into pre-public companies before they go public. They have a select companies on there that are about to go public that you get the chance to invest into it before they actually hit the public market. One of these, if you're a beginner as far as trading stock, Robinhood will probably be the best for you because of its simplistic and rhetoric view and how easy the app is to use. And then once you become more of a professional trader, I would suggest that you upgrade to things like TD Ameritrade, Fidelity, Webull, but definitely Robinhood if you're just starting out. Robinhood is definitely a good one for beginners because the app is like stupid easy to use. I mean, it's very simplistic. The layout is very simple. You don't have to be a major professional trader to be able to trade stock on it. I mean, it's literally very simple and they explain to you along the way. And then they got educations and they can show you how to use it. I mean, it's pretty amazing platform for beginners. But as you develop in your trading, as you develop in your investing, as you develop using your capital, you definitely want to switch platforms to Fidelity and things like TD Ameritrade and Webull because it's a better platform, and you definitely understand why once you become more of a professional trader or a professional investor per se. But definitely, you got to start using those. You got to start using Robinhood if you're just now starting out. So make sure you get in on one of these apps. Download one of these apps. Again, I suggest Robinhood if you're a beginner. Download it right now. Waste no time. You said you're an investor. You repeated the words after me. I'm an investor. So download one of these apps right now and let's make it happen. But if you would like to DM me and you would like to, if you DM me and you want a tutorial on how to sign up for Robinhood, then you can DM me and I'll guide you through the whole entire process. My Instagram is Donnie Nelson and their design, or you can just easily text me too.